channel 11 Coaching Center. So today I'm going to explain our 11th standard accountancy 6th chapter accounting for bills of exchange. So bill of exchange, let's know about the meaning. So a bill of exchange is an instrument in writing containing an unconditional order signed by the marker by the maker or director a certain person to pay the certain sum of money only to or to the order of a certain person or to buyer of the instrument. So it is a bill of exchange of an exchange is an instrument in writing containing an unconditional orders. It is unconditional orders signed by the who is that is signed by the maker or the director of the person. Features of the bill writing are a bill of exchange must be in writing. It must contain an order to make payment, and the order of payment must be unconditional. The amount of bill of exchange must be certain. The date of payment should be certain. It must be signed by the drawer of the bill. It must be accepted by the drawer by signing on it. The amount specified in the bill of exchange is payable either on demand or on the expiry of the fixed period. The amount specified in the bill is payable either to a certain person or to this order or to the way of the bill, or it must be stamped as per legal requirement. So these are the features of the bill exchange. This theme has been for lesson for 5 months. Next is parties of bill exchange. Drawer. Drawer is the person who makes or writes the bill of exchange. Drawer is a person who has granted credit to the person on whom the bill exchange is drawn. So drawer is the person who makes or writes the bill of exchange, and he is the person who grants to credit the person on whom the bill of exchange is drawn or it is prepared. Draw. So draw is the person on whom the bill of exchange on which the bill of exchange drawn for acceptance. Next, pay. Pay is a person who receives the payment from the draw, and the drawer and pay are two persons. When the bill is discounted by the drawer from the bank, pay is the bank, and when the bill is endorsement closed by the drawer of his creditor, pay is the endorse. So like this it will be. Next is contents of bill exchange. Contents are date, term, amount, and stamp. It should be have name of parties or address. It should be have stamp, proper stamp and amount, and date and term. Other things should be it contain, and also it should have the value received. Next, advantages of bill exchange. So it helps in purchase and sales of goods on credit basis. It is a legal valid document in the eye of the law, and a bill can be discounted for the bank before its date of maturity. By discounting with the bank, drawer can get the money before due date if required. It can be easily transferred from one person to another by endorsement. It helps in recovery of debt without sending reminders to the debtor, and also it helps in recovery of debt without sending a reminder to the debtor, and it assures the seller about the timely recovery of debt, and so a drawer and draw can plan about its cash management. They can plan drawer who draws the money or pays the money. They, next is Next is promise note. So a promise note is an instrument. Promise note is an instrument in writing. It is an instrument in writing containing an unconditional undertaken signed by. Features of promise notes are there must be an unconditional promise to pay a certain sum of money on a correct time, and it must be signed by the who makes it, and the name of the pay must be mentioned on it, and it must be stamped according to its value. So the maker and the pay. So the maker is the person who makes the promise to pay, and the pay is person who entities to get the payment, who gets the payment, and maker who pays. Next is like this. It should be here. It should be date, place, and here it should be date, place, to whom, amount, stamp. It should be like this. Next here Differences between bill of exchange and promissory note. So drawer, the drawer is the creditor, here drawer is the debitor in the promissory note, and number of parties, the drawer, the draw, and the pay, and here the maker and pay. And in order of promises, it contains an order to make the payment. It contains promise to make the payment. Same both are. And acceptancy, it is valid only when accepted by the drawer, and it does not require any acceptancy from the draw. Pay, it causes, if it case of bill of exchange, drawer can be the payer of the bill, and drawer or maker cannot be the payer of the promissory note. And noting, in case of dishonor of bill, nothing becomes important. Nothing is not necessary in case of dishonor of promissory note. Liability, the liability of the drawer arises only if the drawer fails to make payment, and the liability of the drawer is primary. The important terms. So term of bill should be written that period that the bill is valid, and due date when it will end, it should be written, and day of grace. Draw is allowed 3 extra days after the due date of bill for making payment. They have given 3 extra days, so that is called as draw of grace. Next is date of maturity. The date which comes after adding 3 days of grace due to date of bill is called as date of maturity. Next is bill at sight or bill on demand. So bill, when no time for paying is mentioned in the paying exchange, the bill is payable whenever it is presented to the drawer. And bill after date. So bill after date is the bill in which due date and date of maturity is ascertained from the date on which the bill is drawn. And discounting bill, so when the bill is encased from the bank before its due date, it is known as discounting bill. So that came off before of its due date from the bank. Next is endorsement of bill. Endorsement of bill means the process of transferring the title of bill from the drawer or holder to their creditor. Drawer or holder to the creditor, if they give, then it is called as endorsement of bill. Bill sent for collection. It is the process when the bill is sent to the bank with instruction to keep the bill till maturity and collect its amount from the acceptor on the date of maturity. You can collect. And dishonor of bill, when the drawer of the bill fails to make payment of the bill on the date of maturity, it is called as dishonor of bill. Nothing of bill, so nothing charges are paid to Artham. So to obtain the proof of dishonor of bill, it is resent to the drawer through a legal authorized person called notary public, and notary public charges a small fees for providing these services known as nothing charges. Retirement of bill, when the drawer makes the payment of bill before due date, it is before due date if you make the payment of bill, then it is called as retirement of bill. Next is renewal of bill. Renewal of bill is sometimes the drawer of the bill finds himself unable to meet the bill on due date. So to avoid dishonor of bill, he may request to the holder of the bill to cancel the original bill and draw a new bill in place of the old bill. Make a new bill if he requests to stop the dishonoring or cancelling of the bill. Next, finally, the next is the insolvency of acceptor. That is when the drawer of a bill is unable to meet the when a drawer of bill is unable to meet the liability on due date and the drawer becomes insolvent, in such case entries for the dishonor of bill are passed in the books of drawer holder and drawer of the bill, and any proportion amount received from the draw is recorded in the book of the holder, and the amount unrecoverable is debited to bad debits. It is debited. So here bill is retained by the drawer till date of maturity. So here in the book of drawer and the book of draw, how you have to write: when goods are sold on credit, draw. The sales account, the drawer. Being goods sold on credit, being goods purchased from drawer. Okay. Next, when bill is drawn, being receiving account to draw. So the bill payable bill, so here being acceptance received from draw, being acceptance given to drawer. Next, when bill is honorable on date of maturity, cash bank account bill received from the account, bill payable of so being payment of bill received from draw, being payable of bill made to draw. Like that only you have to draw, tell the drawer. And here second case, when the bill is discounted from the bank by the drawer. So when the bill is discounted from the bank discount charges to bill receivable, here no entry should be there. And when the bill is honored on the date of maturity, bill payable to cash bank your bank, the bill payable being the payment of bill made. Next, when bill is endorsed in favor of creditor. So when endorsed the bill received, here no entries. When bill is honorable, being payable to your cash bank account. Here when bill is endorsed, bill received, endorser, cash bank to your to bill receivable because date of maturity. Like that only here also you have to this also. Here like this exam they had one to sales account 20,000 DR, that is debited, and being goods sold on credit is 20,000, and bill received account is 20,000, and being accepted received from Y is 20,000. Like that only cash bank account to bill receivable 20,000, being bill receivable 20,000, cash bank is 20,000 debited. Next, bank account is 19,700, discount charge is 300, bill receivable is 20,000. Next, total bill receivable is 20,000. Set is 20,000. Total bill receivable is to account is 20,000. Like this, you have to write. When bill is sent to bank for collection, you have to write credit. Your bank will come down. So that's why. So okay, friends. Till here it is enough. I think so. So this one I will explain at last. Bill sent for collection account, it is 20,000. Bill received is 20,000, and bill sent for and bank account is 20,000 you are debited, and bill sent for collection account is 20,000 credited. Like this, being amount released from bill sent for collection, it gone for collection, then it will come to your bank account like that. So okay friends, clear you understand the thing. So like the video, comment on my video, and subscribe my channel and coaching center for more video. I will explain the next topic of this chapter in the next video. So till here you understand the thing. So okay friends, bye, see you, take care, I will see you in the next video. Till then, take care, have a nice day, bye my dear friends.